today's bank statement. So yesterday we were talking about in 1099 loans, which are both for self-employed borrowers. You can use typically the default on the 1099 loans is 90% as the amount of the gross 1099 income that we can use, unless the business narrative points to a higher expense structure for the 1099 borrower, then that will be adjusted. The bank statement option is not for someone necessarily that receives 1099s, even though if they do receive 1099s, but for whatever reason it may not work for them due to the different requirements for the 1099 loans, they can certainly do the bank statement option as long as they're self-employed and they can show the business activity for the last 2 years. So the main difference is going to be that also the bank statement option is a little bit more preferred in the secondary world. So you do have more options at higher LTVs, especially when it comes to the cash out refi, than you do for the 1099 option. So our first scenario here, best case scenario, 90% LTV, no mortgage insurance, as mortgage insurance is never applicable on any non-QM loan, even if the loan to value is above 80.0%. So at our 90% bank statement option here, 9.75 is our lowest cost option. 8.875 is our lowest rate option, and this is maximum LTV. So now to show you the relationship, again, like I always like to do, on LTV to rate, we reduce the LTV here to a more standard 80%. So now we have 8.25 with a little bit of a lender credit, as you can see right there, 0.113. And you can buy that down to 7.25%. And like I always like to state, if the seller is paying some closing costs for the borrower, you can certainly obtain a lower rate than that, because then any seller paid closing costs, especially paid towards a loan discount, will not be counted towards your points and fees test. So you could definitely get a rate lower than 7.25 and be in compliance. So now I'm showing you a low credit score option. We can do 80%, and we can actually do 80% down to 620. I'll show you that one in a second. But this one, 620 score, pretty good options, right? Considering it's a 620, going to 80%, 11.499, lowest rate option, 10.875. Excuse me, 11.499 lowest cost option, 10.75 lowest rate option with a 620. So investment properties, 85% is the maximum LTV in a bank statement loan for an investment property. So you can buy that, the rate there, lowest cost option, 9.75%, and you can buy that down. Look at that rate, huh? Wow, all the way to 8%. So that is not too shabby for 85% LTV investment property purchase. So now our 80% option with a 3-year prepay, look at that. You actually have a lower rate there than we had on the primary. So we're looking at 8.49% is at par. Check that out. And you can buy that down to 7.125%. And on our investment 1 unit, 80% with a 620. Again, we can do 80% with a 620, which is pretty remarkable. 11.499 lowest cost option, and you can buy that down to 10.875. And I did say I was promising one additional specialty treat here. So here we're looking with a 600 credit score on an investment property. That's a pretty low rate there for a bank statement option, but we can still do that at the mortgage calculator at a 75% LTV. So save the best for last for you, for your, for your borrowers that may be challenged a little bit there. their 600 credit score, 75% LTV. And as I always like to state also, whenever we have the lower credit score, we always like to do credit simulations at the mortgage calculator to see if for minimal effort, and we don't charge you anything extra to do the credit simulation, it's included with any credit report that we pull, the option to run it, and then we can let the borrower know if there are any opportunities to increase the score for minimal effort and minimal cost. The only cost on that would just be the any amount that would be required to pay down an account, because we do not charge either for the credit simulation. There is no cost to the borrower for that. So a lot of times for minimal effort, you can increase the score. I had one where all the borrower had to do was get themselves removed as an authorized user from a derogatory account, no money involved there, and their score was going to increase 76 points. They're going to go from a 600 to a 676. So that's a totally different loan. So that opportunity could possibly be there for this hypothetical borrower, and we always check it out.
All right, great. I don't see any questions up here. Well, looks like we can go ahead and wrap it up then.